was 1 year ago today, the stock market bottomed amid a different type of fear, right? It was a fear and a desperation, really unknown for more than a century. Financial experts told investors to brace for a lot more carnage. But something remarkable happened with the market. It turned around, and it really hasn't turned back. It hasn't looked back. Major indices posted record rebounds while Bitcoin surged in front of the asset pack. As we enter the second year now of this rebound, a lot of things have changed. We have 3 approved vaccines and more in the pipeline. States are reopening. Optimism is building, and yet the stock market has become very cautious yet again. Have we come too far too fast? Will we have to deal with inflation after all these unfathomable amounts of spending and the spike in the money supply? Will something like that or something else derail the market, maybe higher taxes? All of these questions have put a pause into this rally. So for some of the answers, let's go to Belpointe's chief strategist, David Nelson, Simple Trading Director of Options, Danielle, and Mahoney Asset Management's CEO, Ken Mahoney. Before we get to the current market environment and all the angst we're dealing with now, I want to get quick thoughts from all of you, just what you kind of learned in the past, just in the last year, David.
Probably the same thing we learn in every bear market, that stocks are going to do a much better job of sniffing out the bottom than analysts or portfolio managers like myself. It was pretty dark back then, 23 trading days from top to bottom, and it probably shook out some of the brightest guys out there. And here we are a year later, and we're probably asking some of those really tough questions. Have we come too far too fast? I think what stocks knew back then and what investors that got in at the bottom understood was that science would ultimately prevail, and we got that news in November, and the rest is history.
Yeah. But Danielle, at that very moment, March 23rd of last year, all the experts on the medical side said a vaccine was not possible. They ridiculed anyone who even suggested as much in terms of within a year. All of the financial experts, at least most of them, were saying, this rally is going to, this market is going to be down for years to come. It could take years to recover, and here we are.
That's right, Charles, and I think that this has been absolutely unprecedented, right? But I think that is what shows the strength of the stock market. It's really hard as an investor when you have red days, especially when they last up to weeks on end. But what investors should know is that over the course of time, the stock market generally goes higher. And when you look at what's happened over the course of the past year, even the worst economic disaster that we have had, we're still at a point where the NASDAQ is significantly higher than it was before. So look at that going forward, and don't forget to don't fight the Fed, because the Fed is helping us pump up the stock market right now.
I'm going to ask you a little bit more about the Fed, about the Fed in a moment. But Ken, just quick thoughts, the lessons that you learned as a person, as an investor over the last year.
Well, Charles, I remember being on set with you March 11th when we went across the bear market right on set live. I think David was with us at that time, too. And we kept cascading down. And we look back in hindsight and say, wow, March 23rd was the low. But we didn't know at that time. And we came into the month, Dow 29,000. Oh, we shaved off about 11,000 points to the culmination a year ago today. But I think I look back and say, what did we learn from this? I think the resiliency of the American spirit to be able to get those vaccinations, for companies to pivot, for families to pivot, get their kids on Zoom and still continue schooling and so forth. So, Again, hats off to the American public to be able to be so resilient during the most difficult hands that we're dealt.
And David Nelson's point about the market sniffing that out before everyone else is I think, spot on. All right, let me come back to you now, Danielle, because you've had Chairman Powell speaking. They had the Fed report FOMC meeting last Wednesday. Powell put out a op-ed in the Wall Street Journal on Friday. He's working overtime to convince Wall Street he's in control, and they still don't know if he's up to the task. What are your thoughts?
Well, he's working very hard to convince Wall Street he's in control, that's for sure. And we still don't know at this point if he is, but looking at the overall stock market, he's done a pretty good job of convincing investors. So I think that we have to understand that the Fed doesn't have a playbook for this event. We've never seen a pandemic like this before, and we haven't seen this reaction in the stock market. But as of right now, they've been doing a pretty good job of keeping the stock market afloat, and the economy, of course.
All right. When you said the Fed doesn't have a playbook, I thought you were going to end the sentence there. I didn't know you were going to keep talking. So Because I got to be honest with you, David, right now it doesn't feel like they have a playbook for this exact moment. Listen, we're in uncharted territory. We've created money around the world, particularly this Fed, though. The money supply is spiked up. People are talking inflation. A lot of this stuff Jerome Powell is making up now on the fly. And it was you, by the way, who a few weeks ago, before most guests, called this spike in bond yields. You said this was serious. I don't think a lot of people were taking it as seriously as you were. So now, how do you explain the hesitancy, even though the bond market seems to have settled down?
I think the bond market is part of it, but to your point, 10-year yields are fairly benign today, and yet the market looks pretty pensive. We've kind of gone back to that large cap secular growth trade. That's a very defensive trade. Even utilities are probably doing better today. I think what investors are looking for is a catalyst, and that catalyst is likely earnings. We're coming to the end of a quarter. The good news, Charles, is that since the end of the year, estimates for the S&P 500 have gone up from $165. We're now all the way up to $174, $175. As long as the vaccine rollout goes on without a hiccup, I expect those numbers to push higher.
Speaking of rotation, Ken, I know you're a big fan of Cathie Wood. The haters, man, golly, they have been coming out hard, laying it on thick as her fund has been pulling back. Are you staying the course?
We are, but Charles, we're a little bit underweight here at the moment. And the reason why is we hate to be in a stock or ETF or money manager that's making headlines. We like to be under the radar. And much of last year, the funds, ARKK and so forth, were under the radar, and we actually really nice growth there. One thing that a lot of investors are saying that this transparency trade, that every evening getting emails of what she's buying, what she's selling, does that really help shareholders? I don't think so. I mean, there's a reason why Warren Buffett and other money managers, tell you 3 months later, 6 months later what they bought and sold, so they're not tripping over each other. And for Cathie Wood and this transparency, there's a lot of people who are buying off that newsletter that comes in every night, and they're not ARKK shareholders. They're not ARKK shareholders at all. They're traders. And so, building a position is going to be very difficult when you're letting everybody know at the same time what you're buying and what you're buying.
It's worked well for her accumulating these assets, but you're right. There's some things now that might be not working for her. Danielle, I know and more recently you've liked high beta names, Netflix, Etsy. Are you staying the course with those names as well?
I am staying the course because if you look at the course of the past few months, I think that there was a little bit of seasonality in play. We also have a new administration. But coming up, we have a new run into earnings. So we have our next quarter coming up. There's a lot of stocks out there that investors are really bullish in. And what happens is those investors buy those stocks prior to earnings. I'm looking at the NASDAQ. It's been consolidating. I think it's going to break out to the upside. And I think it's going to take Microsoft, Snapchat, Etsy, Carvana, JP Morgan along with it. So I'm definitely staying long and with the high beta names as well.
I happen to be a fan of all those stocks, too, just for full disclosure. David, it's interesting to me because I'm looking at Royal Caribbean getting smashed today. The airlines were weak yesterday. And it feels like we're in this environment where it's rotation. And what's hot gets sizzling hot for 2 or 3 weeks and then falls completely apart and folks find something else to buy. Is this a concern of yours, or is there something else that we should be really worried about with this market?
I'm not sure there's anything else we should be really worried about. Investors for the last 6 months have been rushing from one side of the lifeboat to the other. And all those areas that are red on your screen today, that's where I'm concentrated. Those pro-cyclical moves out there, the financials out there underwater today. Companies like Nucor, estimates are up 67%. And yet this stock is getting slammed today. Even low-tech stocks, low valuation stocks like Micron, getting slammed. So I'm in the pro-cyclical camp at this point, and I'm kind of disturbed that everybody's going back to large-cap secular growth. It means they're sniffing out something that isn't quite right.
And by the way, Ken, I know you like NVIDIA. You also like the Qs.
Yeah, look, pretty much what David said. Pendulum keeps swinging back and forth, but all this kind of poor value, growth, value. At the end of the day, investors are going to pay up for leadership. Now, look, QQQ has been under distribution. There's been no doubt about it because money's been flowing into the cruises and airlines and so forth. But I think money is going to come out of there. We're kind of disappointed that even when we do get back to the so-called normal economy, those companies, those sectors not conform. I think we're going to get back to leadership again. Believe it or not, the Apple, Microsofts, and all them, and you'll find those in the QQQ, NASDAQ 100. So good time to buy. By the way, just missing the 50-day moving average here today. So hopefully you can get some strength and stay above that 50-day moving average.
Ken, Danielle, David, thank you all very, very much. 1 year ago today, golly. Hey, fresh off his $1.9 trillion